What's going on, everybody? Hope you had a great Tuesday back in the markets. It is June 20th, and we'll be looking ahead to the 21st. Before we get into it, don't forget that this video is for educational and entertainment purposes only. We're only about 50 subs away from 500, so I would really love and appreciate it if you could drop a follow, smash that like button. It really helps the video get pushed out to more people, and make sure you have those notifications on as well so you guys can stay up to date with what we are seeing in the markets and hopefully assist you in some of your own viewpoints as we try to navigate these tricky markets. But we've had quite a run, so haven't been too tricky so far, in my opinion. We've just been going up. But as we pull back here and potentially see a little bit of a cool down and a bit more of a consolidation trend, price action can certainly get more tricky. So let's just be on the watch for that. But markets were down today. Red 0.52%, down about $2.30. Final print was 437.18. And we're looking at the daily chart here. Now we are still above value. We're starting to see a little bit of weakness come into the Momo here. Finally, as we've been watching these overbought levels on the daily chart. And let's just flip over to the weekly. Nothing on the weekly yet, but certainly still very extended from the main moving averages as of right now. However, we did see a gap down today in the markets. We did not fill that gap, but it's no coincidence where we ended up bouncing, and I will show you on two different charts here. But we came basically right into that 435 area, basically the daily 9-day moving average exponential, and that is actually sitting at 434.94. It could have adjusted a little bit, so it might have been just a little bit higher, but needless to say, perfect bounce off of that level, as you can see here. Boom, and was pushed back up. We didn't get that gap fill. Will we get it tomorrow? I'm not sure. Just a heads up, we do have Powell testifying in front of the either Congress or the Senate tomorrow, one or the other. I think he's on for 2 days. I think it's really going to be moving the markets? No, not too much, but whenever Powell speaks, we do want to be cognizant of that fact, right? So as I was saying before, we've been on this trend, right? Trend, and the likely thing to see now still, and I know I was saying it, giving warnings even here when we started gapping up, but we definitely were talking about it here. Seeing that consolidation cycle, right, come into the market. Markets only have two moves. They consolidate and they trend, right, and then they just go back and forth. So we just want to be aware of that consolidation, and that can lead to the more choppy price action, fake outs on both sides. As people might have chased the short today, probably got hammered as we reversed. Did not fill the gap, so we will be watching for that potentiality. Gap fills up by 439.55, so be watching that, but haven't really been able to get over this 437.80. We'll call it 438 area. Really want to see some candles get over that and start seeing some hourly closes for that potential of the $1.50 move higher to end up filling this gap back again. But let's just take a look at our other macro chart really quickly. And you can see also here, and this is why I'm stressing how important the macro is, with our horizontal trends here, or a diagonal, I should say. It came right into this trend line here, and that has had that nice confluence with the 9-day moving average as well, and you can see the bulls coming in to defend that. So where did it come in from? Here you can see the points of contact. Boom, 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 and boom. Now we're back testing that. So at least you can see here where it touched, here where it touched, here where it touched and rejected, and now we're testing it again. All right, so the other thing I did want to point out is that we did lose this the first main bull pivot. So although generally speaking, yes, I am bullish, and we could see some consolidation just coming in here sideways like so, before either we break back over this main key pivot or we start to crash underneath. And as time has been moving on here, it's time for me to extend these just a little bit. So that way we have them set up for us as time passes. Okay. All right, so really, the most optimal thing for the bulls, and sure, there might be dip buys to take and to get back into this, but from the bigger picture here, we're going to want to see a recapture, and you can see it today. We did try momentarily getting over the last pivot here. It was in pre-market. We never got there during the open normal New York session, but so coming back over, certainly clearing back over that 438.15. Nice little confluence there with the 9 and 20. So we get over this 4-hour area, moving averages, which pretty much line up with that 438. Then we can start looking for that gap fill and getting over this. Now, I'm not going to chase any type of breakout. Going to see if we break over, come back, retest, and then we can look to these higher prices about potentially getting over 441 depending on the time of day, 441.50, getting over this area, and then coming in to fill this point of pain here, this breakdown candle at 442.15, 12 area, and that's what I'll be probably looking for if we do in fact start to recapture this key bull pivot and then this trend line. But if the bears are able to defend here, and technically, we are in a downtrend right now, and certainly I could make, well, this is going to be a bit messy. Hold on, let's look at it like this. We could make a little bit of a case, not the cleanest one. Could make a little bit of a case for a falling wedge here, right? As long as this area here can hold. You can see that fake break here on the 4-hour and then bought right back up. But so I'm going to watch to see breaking over this potential downtrend, but really recapturing 438 and then getting back over 440, filling that gap to bring us back into this next zone around that 442, like I was saying, into this area here. But if the bears are able to defend, and as far as the downtrend is concerned, certainly, yeah, we are in now a downtrend, right? We had a high, lower high, lower high, even a lower high here, lower high here. So the trend is moving down, and we have broken that previous uptrend channel that we were watching. I took it off the chart, but I could draw it really quickly. Something like that. This, of course, is not as clean as it was before, but you get the idea. We have broken that structure, right? And now we are running a bit sideways. And like I was saying earlier, it's very possible that we just consolidate and kind of gonna maybe come up to, I don't know how long the range is. We're gonna really have to let it be established. We only have 1 day of trading data, so probably after tomorrow I'll feel a little bit more comfortable saying, okay, the range that we're working with has now been established. I'm not going to go after 1 day of trading activity, but just based on that, you could say bottom side 436.50, top side 440, right, about $4 right in here. But let's see if that expands or if that stays tomorrow. But this is the loose, this is loose range right now. But like I said, I really want one other day to confirm the range, and then we can really have a little bit more confidence in saying that it has, that balance zone that the market's trying to establish, is legitimate. You know, if you can get in a lot of trouble. This certainly is tradable, but if you really want to wait, you know, I would wait for that range break and then the breakout and then back test and then move up higher, and the same thing for here. But you know, you definitely have to be careful. That's a 4-hour chart we're looking at right now, but you know, on the hourly you can see the fake out here on the hourly. So you know, definitely be aware of that. And you know, if you chased a short down here, you got smoked today. Pretty much a double bottom, right, from the Thursday. What is this? Yeah, this is the Thursday open, right around here, around that 435. And like we said, that was that 9 confluence, and right here at the bottom of the volume profile value area low, basically. It's a little bit lower, 430, 485 or 87, but pretty dang close. You know, if you were to take this direct long, you know, it's like a 30-cent risk. So that's not that bad. But let's see if this is the range that's going to be established. We really don't know yet. You know, I would probably be looking still, you know, unless, yes, you know, I'm not opposed to playing the upside, you know, in this area. But really, to get a real bull move, we're really going to have to recapture that 440. And, you know, that's these lows right here. And one could even make the case that we would need to take out this candle low, which is 440.34. So I'm going to call it 35. So 440.35 area, that recaptures, comes back test, hold. That's going to be a little bit more confident for the long. You know, you can trade the range if you want to, just be a little bit careful. Obviously, you don't want to get chopped up, you know, chasing long, short. You'll drive yourself crazy. But yes, you know, there might be a move for the shorts under the 436.52, but for that better confirmation, I would say you're going to need to see under 435. It's going to need to hold. Now this value area low might change up a bit tomorrow as the volume profile restructures, but we can look at that area as well. 435, 434.85, we'll call it, really getting under that area. And even then, you know, you've got this zone here, which has shown buyers twice now. That could be a little bit weaker, but breaking under these is really, that's when you're going to see even more of a retracement, in my opinion, down here. And that's totally fine and totally perfectly healthy. You know, we're going to need to see markets cool off a little bit so that they can build up that, have everything reset and build up for that potentiality to move up higher, right? We were talking last week, the risk reward up here and up here isn't very strong, but as we come down to retest some of these key areas, then it really becomes more in our favor to finally make that move up higher. Ultimately, those targets up into the, you know, the 445, the 448, and 450. But those are obviously, those are bigger targets. So yeah, so there might be a short trade there under the 436.50, but the real one, like I said, it's going to need to see there. And again, you know, we could, you know, you could trade the range just back up into this 439, 438, 440 area. But the first thing we really need to see is that recapture and hold of the 438. So that would be ideal to me. And you can see here how that zone 438.33, that whole zone kind of gave us a little bit of trouble after we bounced back up, right? And then we sold back down a little bit. But we are hanging out here right on the hourly POC at 437.15, just slightly above that in after hours here, 437.60, 39, excuse me. And yeah, so let's see how tomorrow plays out. Not too much to cover overall. Of course, you know, there are still some stocks that are really making some impressive moves today, like Nvidia and Tesla. and they are just really helping propel the market higher. While some of the other major caps, not Amazon, Microsoft did hit all-time highs, not all-time highs, 52-week highs last week. AMD is cooling off a bit now, but it had been on a run as well. Apple hit new 52-week highs not that long ago either. So there still is a lot of strength out in the market, generally speaking. But yeah, so will we get more of a pullback, or are we just going to push right back up to the highs again? Let me know your thoughts in the comments. Higher, lower, sideways. I'm in the sideways camp for a little bit, but we'll see where we go. All right. So I hope this helps give you some framework for tomorrow, and I wish you the best of luck in your trading. Make sure you follow your rules and follow your plan. Take care.